Straight up to the rupee, which has ended the day at 63.24 against the dollar today, its lowest level since September 18th. The dollar has seen demand from OMCs also impacting the currency. Let's listen into expert on the road ahead for the currency.
Given the higher level of volatility in markets, so I would assume the near-term environment remains challenging, barring of course some intervention from the RBI. Market is worried not just about inflation, but the fact that the month of November sees the highest net supply of government bonds for the whole financial year at 75,000 crores. So both these factors have weighed on bond sentiment. The underlying problem is that now that Fed taper is in the air, people or global investors are looking at emerging markets in a more closer scrutiny. So they are looking at it more discreetly.
Let's also get on board then Vijay Bhamwani, who's author and CEO at BSPL India. Also joining us is Alok Singh, Chief Investment Officer, Fixed Income BOI, Exa Mutual Fund, with their expert view on the currency. Vijay, to you first, and what's your sense, the kind of decline that we saw coming in for the currency today, 1.5% in previous week and more than 1% alone today?
Good evening, Manisha. This is the kind of movement that I have been talking about for almost 3 weeks now. And I talked about 63.5, 64 in the futures segment. And you've almost seen 64 being tested on an intraday basis in the prompt month futures. The appreciation of the rupee, which I talked about as having largely been done when it tested 61.5 odd levels in the futures segment, is now seeing a technical correction or a reversal. My guess is once 64 is tested, you need to again evaluate whether the dollar bulls are following up with their buying, and in that case take the USD INR in the prompt month future series to probably even 64.70 odd levels. Failing which, there could be a small technical decline in the USD INR to probably 63.20 levels. Again, I refer to the futures segment because the cash will be at somewhat lower levels. I think what the markets are now doing is seeking stability. Your intraday volatility is shrinking. The rupee is attempting to find its market-driven levels, and my guess is you're going to gyrate between 62.80 on one end and 64.5 at the other. I think the dollar bulls are attempting a comeback, and how much of a comeback they will make will depend on the follow-up support that they offer at the current levels.
Vijay, also the dollar index is now well above 81 for a second straight day. How much of further gains would you expect on that?
I think clearly the end of the calendar year is likely to see strength in the US dollar. And I talked about 81.20 odd levels as being the first level to watch out for. Should 81.20, 81.25 levels be taken out with good volumes, the possibility of 81.60 should not be ruled out in the coming 2 trading weeks. And at lower levels, I think 80.68 to 80.75 will offer meaningful short-term support on declines.
Vijay, it's not just the rupee which seems to be falling so much. While we have our own domestic problems, but if the rupee is at an 8-week lows, you also have the Thai baht and the Indonesian rupee are trading at a 6-week lows as well. So would you say it's more about concern about Fed tapering than anything else which seems to be bothering us?
I think so, yes, Manisha. The emerging market currencies are taking it on the chin, and they are reacting in the manner which is best anticipated, which is showing signs of weakness. And typically speaking, the end of the calendar year does see safe haven buying in the US dollar, which is likely to persist. And I would not really be surprised to see the Southeast Asian currencies remaining under pressure vis-a-vis the US dollar.
Let's get Alok on board as well. And Alok, welcome to the show. How would you read the kind of decline that we saw in the currency today? More than 1% down. Would you say that we're going back to those very high volatile 64, 65 kind of levels yet again?
No, I don't think so that we are going to that level in a hurry, because if you look at since then the macro environment has changed quite a lot. Our current account deficit, whatever be the reason, but has improved, and for it to go to that level, again, we have to see that kind of gold import being there. And, one thing which has to be taken into consideration, that when we had that kind of high import of gold, we didn't had this level of export, which has increased roughly 5% month on month, seasonally adjusted. And, so, that is something which has changed fundamentally. So, it will avoid rupee getting depreciated to previous levels in hurry, until unless something more happens on the US side, which we don't have a counter for.
Look, the trade data today was not much to talk about. The inflation continues to be much on the higher side. So would you say on one side, while the US numbers are good, which is a cause of concern as the Fed stimulus might begin, the Indian numbers really are not giving up much a show?
Yes, see, if you look at from where we have moved, we have seen some amount of improvement there. Whether you can say that, okay, is it the right level, or are we comfortable with these set of numbers? One will say no. And, as you rightly said, inflation is still a problem, and which will pose a problem on current account deficit again. But the biggest point is that, the increase in export, as I said, which is 5% month on month seasonally adjusted. And that is something which, one need to recognize. The biggest worry over there is, will be able to sustain that kind of level is a question. And, maybe not that level, but, with the rupee being supportive, and developed economies like US and, Europe showing some amount of demand increase, I think it will be able to sustain some healthy export. And I think that's where the savior is, because the gold demand will again mop up as we move into the wedding season, and some amount of inherent demand will come in. So I agree with you that it is not very comfortable trade numbers, but at the same time, what led to rupee being traded at those lows of 68, and so we have improved since then. So my point is, yes, it is not what one as an economist will expect it to be, but at the same time it is not going to same levels, because we have, as I reiterate, some amount of improvement has happened.
Fair point, Alok. We are down nearly 12% in this year. We are 8% off the kind of all-time lows that we saw in the month of August as well. But with less than 2 months left for 2013 as a calendar year, what is the range that you are holding for the currency?
I think looking at current scenario, I think somewhere around 63 centric, I think it should trade for most of the time. And as there were rumors today itself that RBI was trying to support it later in the day, I think that trend will continue, and I think around 63 is what I'm hoping it to, basically 63 to be some kind of pivotal level right now.
One final question, Alok, and what's your sense coming in for the dollar now? Because much of safe haven buying, the high yields is making that currency or that area as a better investment than anything else.
Yes, clearly, the data which has surprised everyone, I think that is the key. And if the data continue to surprise like this, I think the US Treasuries move up further, and which has an impact on the currency. I think that is a bit of a black box, because the way the data has come out, it was not expected by any of the economists on the street. So it's looking at that, and it has surprised not only on the positive side. If you look at data has surprised the market on the negative side also. So US has been showing some amount of mixed signals, so it's very difficult to predict a data trend over there. You only have to wait for the data and take a call on that. But yes, if the data remains strong like it has been, I think US Treasuries will head more towards 3%, and I think that will have a positive impact on dollar.